Okay, so we got a big day tomorrow. We got Q2 earnings coming out for fiscal year 2022 on September 22nd, 2021 at 5:30 p.m. Eastern Time on a Wednesday. I'm going to go over as to why I expect this earnings to be actually a pretty good one. It's going to beat analyst expectations in terms of earnings per share and revenue. Unfortunately, it will be a year-over-year decline. I'm going to explain as to why. I'm going to go over the patent sale, if it's going to come out this earnings or the next earnings. And it's going to be a quick review of that. The next video will be more detailed for that. I'm going to release that today as well. I'm going to go over as to how the stock will react overall within the market, because we have the Fed meeting tomorrow. Plus we have, in terms of the Chinese market, how it's going to be reacting. And a quick disclaimer, like always, I'm not a financial advisor. I'm not a professional. Everything I do share with you is just my opinion. It is not advice. So please do your own due diligence and research before buying and selling. Now, this is quite important because it's releasing a few days earlier than usual. It's on a Wednesday, so they could have released it on a Thursday or early next week and so on and so forth. But they're releasing it a few days earlier than usual. And the reason why I'm saying that is because if that is the case, sometimes the company could be optimistic with the earnings release report that they're releasing, especially since estimates are quite low, and I'm going to go over that as well. So if you look at Q2 last year, September 24th, it was released on 2020. The year before that, it was on September 24th as well. So Q2 the year prior, September 24th, 2019. And the year before that, it was on September 28th, 2018. So recurring theme that it's at least on September 24th or after. And if we look at estimates right now, for the time being, it's going to be quite easy to beat. Average estimates for earnings per share is -7 cents, which is extremely low given last year it was at 11 cents. This is not estimates, this is actual earnings per share. It was at 11 cents last year, same time, same quarter. And you could say the reason why it was that high was because it included patent revenue licensing, which will not be included in terms of this earnings, unless the patent sale does happen and occur, and I'll touch base on that as well. But if you remove that from this earnings, you're removing about roughly $62.5 million in terms of revenue for this quarter. And the way I got to that is roughly about $240 to $250 million comes in terms of revenue licensing, like the revenue itself. So if you take, for example, 250 million divided by 4, you get 62.5 million per quarter. And that does not make up that much of a difference between these two. So I think I'm expecting a beat nonetheless. The reason why analysts are coming in with an extremely low estimate for earnings per share in terms of the average side is because I'm assuming John Chan, the CEO of BlackBerry, stated two quarters ago the expectations for forward outlook is relatively low for this year, especially given patent revenue licensing won't be coming in for the most part. So that could be the reason why. But it's not bad news because it's a lot easier to beat low expectations. So that is a good plus side overall. Now, the thing is, though, too, at the same time, beating earnings per share estimates is not a really big deal because we've done that consecutively nonstop for the past earnings. So you can see here for the past earnings estimates were relatively on the low side, and they were either beat by the company. So actual earnings per share right here were either a beat or a match. So that is a good sign. You can get this information on Yahoo Finance, BlackBerry stock analysis, so on and so forth. But what we're looking for is to beat revenue. So their estimates on the analysis side, they're expecting an average of 163.5 million. And that is pretty good in my opinion, because I think we're going to beat that relatively simple. The only problem is the year over year is potentially going to be a decline and not a beat, and I'll explain why. So average is coming in at 163.5 million. That's what the analysts are expecting on the street. On the high side, it's 167 million. On the low side, it's 158 million. But the most important is the average, which is 163 million. Now, if we go to last year's earnings, which was arguably during the main part of the pandemic overall, and they got GAAP revenue, total company GAAP revenue at 259 million. The reason why I'm covering GAAP revenue is because they will no longer be covering non-GAAP revenue, they'll be covering GAAP revenue. So 259 million, and if you remove that 62.5 million that I mentioned in terms of patent revenue licensing, because that will not be in this mix, you're looking at pretty close to 200 million. And 200 million, or let's just say it's just 198 million, beats 163.5 million, and it beats the high estimates of 167 million, which is awesome. And I'm going to show more points as to why it's going to beat the estimates overall, and then I'm going to show why it's potentially going to be a year-over-year decline. So if we go to Q2 the year prior to last year, then we have right about here 244 million minus 62.5 million. I believe it's 181.5 million, which 181.5 million beats again the estimates that we're expecting for this quarter. Now keep in mind as well, if we go back to last year during the pandemic, this is not accounting year-over-year growth. So for example, even though you're taking, let's just say we're including the patent sale revenue licensing into the mix, right? We're accounting for if we had the exact same revenue as last year, 259 million, and no year-over-year growth. So if you were expecting, if you put the patent revenue licensing into the mix and you had 259 and you have year-over-year growth of like even a few percentage points, let's say we went up to 270 million, then you minus the 62.5 million, you'll be obviously above 200 million in terms of revenue for this quarter. So I'm accounting for no year-over-year growth and then minusing the 62.5 million from the patent revenue licensing and getting that close to 200 million revenue for this quarter. Like I stated, for the previous quarter, it would still be a beat at 181 million. And then the quarter before that, again, this is not counting for growth constantly. This is just taking the face value. So we had 210 million for GAAP revenue, total company GAAP revenue. And then if you minus 62.5 million, I believe it comes in at 147.5 million, which would be a miss, unfortunately, in a decline, extreme decline. But I don't expect that to happen because, again, that's disregarding year-over-year growth and all stuff. And we've seen year-over-year growth. So this was the quarter in 2018, 210 million came in, and then after that it was 244 million, and after that it was 259 million. So there is growth, but considering potentially if you disregard growth, you're still beating estimates because they're, in my opinion, they're extremely on the low side, and I'm expecting to beat them, no problem. Now this is where the analysts are going to essentially ding the stock down further, even if the earnings per share estimates is beat and the revenue is beat. The problem is it's year-over-year decline, and we saw this last quarter too, where so they almost they don't put into consideration that patent revenue licensing is not in this mix. I know there is a small percentage amount of patent revenue licensing coming in, but it's almost minute where it's almost not even worth putting into the mix, right? The most ballpark of it is roughly about 62.5 million. So they don't put that into the mix of the analysts. The analysts don't put that into the mix. So for the revenue, it has to come in roughly about basically 270 million, and that's even without the patent revenue licensing, which to me would be an amazing quarter because it would have year-over-year growth without the patent revenue licensing into the mix, which is awesome. I don't see that happening, so it's probably going to happen. Let's just say, for example, it comes in at 200 million. Well, 200 million plus 62.5 million is actually 262.5 million, which would be technically year-over-year growth, but the analysts won't acknowledge that patent revenue licensing is not necessarily in the mix, so they would still say it's a year-over-year decline. So to take care of that, if total company GAAP revenue comes in at 270 million, you basically beat non-GAAP revenue, beat GAAP revenue. It's a year-over-year growth. Plus, if you're aware of the stock and you know that patent revenue licensing is not in the mix, to you would know that it's essentially undervalued because that is not the true representation of what potentially could be coming. Now, I know what the next question is. Well, what about the patent revenue, the patent sale itself? Is that expected this quarter? I'm expecting it to be this quarter. The only problem is there was, in terms of the 2 quarters ago, they stated that most likely, like not necessarily in the exact words, but it'll be coming out in Q2 of this year, potentially Q3. And I'm going to be releasing a video going over that transcript where there's most likely will be coming out in Q2, but for sure, in my opinion as well, but based off the transcripts that I'll be showing, it's definitely most likely going to be coming out in Q3. And if that's the case, I'm going to explain as to why, if the stock goes down, there is a chance, but it could be a great time actually to accumulate shares for BlackBerry stock for Q3, which is at the end of December, because you'll have, in my opinion, a really good earnings for December because of the Microsoft deal, which I still haven't released the video, but I'm going to explain why in that video, that revenue coming in for Q3 will be substantial, relatively speaking, right? It's not going to be anything like out of the, like not necessarily crazy, but it's crazy for BlackBerry overall, so it's going to be beneficial. Plus you have the patent sale, so really good combination for that earnings. And given how the markets are reacting, markets could get dragged down. So I'll go to the next point after all this. So quick recap, what we're looking for is $270 million in terms of total company GAAP revenue for this quarter. And we're looking for earnings per share. So anything better than -7 cents, hopefully in the positive. If it's like 0.1 cents positive, that would be great with the revenue beat, and so on and so forth. Now, in terms of the way the stock is moving, and in terms of how you could essentially look at this in terms of accumulation. So right now, if you've been a viewer of my channel, you know that we have this overall pattern right here where we came down, bounced off support, went up to the upside resistance, came down, bounced off support, hit resistance, and essentially coming down to bounce off support. And this dates back since December of 2020, right? What we're looking for is essentially to not break this support level, which is essentially at the low $9 price point. And to account for false breakout, we don't want to break that $9 price point support level. Now, because we have the Fed meeting on Wednesday, which is the day of when earnings BlackBerry share is going to be announced, I don't expect BlackBerry to break that $9 price point, but if it does, it gets a little bit tricky because that support level is gone and could technically drop down. And the reason why I state that is because for the Chinese market, the second biggest real estate developer is $300 billion in debt, and they could default on their loans. And you might think, how does that affect the overall markets? It's because the global economy is connected nonetheless, right? For example, you have the supply chains will be affected if they no longer need to build houses, or they can't build houses, and people are not buying houses in China and all that stuff. Then that demand slows down, and then the exporters into China no longer will be able to get revenue, so they get affected, they get pulled back, and then foreign investors will no longer want to hypothetically, or like foreign investors, like for example, investors in China, maybe need to withdraw some funds. On the state side, for example, the S&P 500, it's only 80% US, and then 20% of it is foreign, and then you have BlackRock invested in China and all that stuff. So basically, it's like a web that is affected. Everybody's affected, right? So if markets get pulled down for all that stuff, and on Thursday, by the way, quick thing, that company has to pay part of their interest on Thursday coming up. So we have Fed meeting on Wednesday. We have on Wednesday after hours, BlackBerry reporting their earnings, and then that Thursday, that company has to pay interest, not BlackBerry, but the Evergrande, but they have to pay interest. So if the markets get collapsed on Thursday, even if earnings is essentially a beat, unless if it's phenomenal, it might spike up and get pulled down a little bit. But as long as we don't break $9, we're fine. Now, if earnings is really good, and if patent sale does get released, it's going to start, in my opinion, at least flying and almost disregard the markets. Now, the only problem about the whole entire thing is it's most likely going to still get stuck by this downward trend resistance line. Now, the reason why I'm stating probably is because this downward trend resistance line only has 2 touch points. So we don't know if it's a guaranteed downward trend resistance line, but if it is, you're looking at probably potentially getting stuck at $13.50 to essentially $14 price point, accounting for false breakouts. But before you get to that, if the markets get dragged down drastically and the patent sale does come out, if you kind of don't want to account for volume, the stock will go up roughly to this resistance price point that I've mentioned in the past, where it's roughly a horizontal resistance, roughly about $12.38, $12.40, where it could go up to that price point, but that's accounting for almost like essentially no volume if the patent sale is roughly about only $1 billion. And if the patent sale is more, obviously it'll go up, but it potentially might get capped by this downward trend resistance line after the fact, even with mixed in volume at $13.50, $14 price point. Now, if Wall Street Bets comes in with full throttle and the markets don't collapse and all that stuff, then hopefully these price points get passed, broken through, and then the run-up would essentially become a crazy run-up. The only thing that's worrying me is potentially the markets could bring down the stock, because if the markets go down, everything essentially comes down, and BlackBerry could go up, but it'll probably just get dragged back down. That's the only downfall. And if volume doesn't pick up from, for example, Wall Street Bets as much as it should, depending on the patent sale, how much it comes in, then the run-up might not be crazy because the overall market's getting dragged down, if that makes sense. I feel like I'm just rambling on about overall markets might get pulled down, but what we're looking at is we don't want to break $9 in terms of support level, this upward trend support level right here. We want to have good earnings based off what I stated, beating $270 million for the quarter in terms of revenue, earnings per share as well. And we want, hopefully the markets don't get pulled down this week, and hopefully skyrocket and break through this $13.50, $14 price point resistance. Now there is resistance at $15, extremely strong resistance at $15, but hopefully momentum picks up and we pass that. I can see us getting knocked back down, but if we do get knocked back down, hopefully we don't break through, come back down to down the downward trend resistance line. So I'll explain. So let's say we spike through to $15 roughly and get knocked back down. If we bounce off the downward trend resistance line as support and continue to upside, we're still perfect, we're still golden, and that would be ideal. And it would look like we're in trouble, but we'd still be fine if we bounce off a support level. Hopefully you like the video. Hopefully you find it helpful. If you have any questions, do not hesitate to ask. I'll try to answer them as soon as possible. And if you like videos like this or other financial videos, or other stock videos in general, consider subscribing so you'll be notified when I do upload those videos. Thanks again for watching. Appreciate it, and I'll see you in the next video. Peace.